FHA versus conventional. If you need a mortgage to buy a house, you may find yourself weighing these two options. What's the difference and which one is right for you? Lacey here with Bella Vista Homes, bringing you knowledge on all things new homes, mortgages, and construction. But let's dive in. Conventional lenders are going to look for borrowers who have well-established credit scores, solid assets, and a steady income. They tend to be a little bit more strict. Typically, you need at least a 620 credit score and ideally a 20% down payment. Although you can put as little as 5% down if you want, but just know on any down payment under 20%, you'll have to pay private mortgage insurance, which is an extra monthly fee meant to mitigate the risk to the lender in case you default on your loan because you're putting such a small amount down. Now, most conventional loans, depending on the lender, require the maximum back-end debt-to-income ratio to be anywhere from 36% to 50%. Now, what's a debt-to-income ratio? To keep it simple, essentially this number compares how much money you owe on student loans, credit cards, car loans, and hopefully soon a home loan with your income. So for instance, if your household take-home income amounts to $5,000 per month, that would mean that you should spend no more than $2,150-ish per month on your mortgage plus the other debts. So everything total to keep the back-end ratio at 43%. Now to FHA. FHA loans are great for first-time buyers or people without great credit or a lot of money to put down. How can they do this? Well, it was created by the Federal Housing Administration, which means these loans are insured by the government. So that guarantees that lenders won't lose their money if borrowers default on their mortgage. In short, it allows lenders to take on riskier borrowers, which is also helping hopeful home buyers in less than ideal circumstances achieve the dream of home ownership. To qualify for an FHA loan, you need at least 3.5% down payment and a credit score of 580. Although you are not necessarily disqualified with a lower credit score, you'll just have a potentially higher down payment and possibly higher interest rate. These loans compared to conventional loans also have a looser debt to income ratio for the back end and the front end. So why not just go with FHA every time? There is a draw to FHA because the federal government insures these loans. You have to pay an upfront mortgage insurance premium, which is currently about 1.75%, and an annual mortgage insurance, typically 0.85% from the loan amount. There are also lower caps to FHA loans, so you can only borrow up to a certain amount. Currently, FHA is capped at $524,000. Generally, if you have the means and qualifications to afford a conventional loan, this is the one to opt for, especially since it has fewer restrictions and you get to avoid those fees. However, if you're a less than ideal home buyer with a mediocre credit score, down payment, or income, then an FHA loan may be the best way to go or only way to go. But check with your lender just to know where you stand, or reach out to me for a free consultation to go over the numbers. I'd love to help. As always, if there's anything else I can help you with, please don't hesitate to reach out.